Owen Khumalo, Chief Executive Officer of Weaver Investment Management, joins us now for more reaction. Owen, thank you so much for your time. Good afternoon. So Ithala Bank was found to be technically and legally insolvent. But what does this actually mean in more simpler terms?
Good afternoon, and thank you for having me. This is quite an interesting story, and it's a fast-moving story. And there is contestation between what the Prudential Authority has concluded and what Ithala themselves are saying, because they came out yesterday and issued a statement to say they contest the way the calculations have been done to come to a determination that they are technically insolvent. In simple terms, when a company is or an organization is defined to be technically insolvent, it means the assets are exceeded by the liability, so they owe more than what they own. So in the event that they have to meet their liabilities immediately, they don't even have enough assets to cover those liabilities. But what Ithala is saying, and I took the opportunity to look at their last annual financial statements as at the 31st of March 2024, which were signed off by the Auditor General. They're saying their assets actually exceed their liabilities. So if these figures are correct, their position at the 31st of March is that they had assets of just under 3.2 billion in total, and their liabilities total 2.8 billion. So they're saying, well, we've got excess assets or excess liquidity of over 300 million, so we're not technically insolvent.
So this is also, Owen, a provisional liquidation, right? But I understand that government guarantee will still kick in order to protect its consumers. So what should the consumers then be doing if they had investments or even loans with the bank during this particular time?
I think the customers of Ithala should not panic. The last thing we would want to see, or what the market would want to see, is a run on deposits. That is when everyone then calls in their deposits and they want to take their money out, and that will collapse Ithala. So Ithala customers would do well to just take a deep breath and not panic and not have a run on the institution. I'm glad that National Treasury has come out and said, no, we'll guarantee those deposits. Every single depositor of those 257,000 depositors that are affected will be paid in the event that they need to be paid. But there is an interim suggestion underway now that Ithala has agreed to with National Treasury to say, whilst we're seeking our licensing requirements or sorting out our licensing requirement with the Prudential Authority to operate as a commercial bank, we can then move the deposits to another bank or another financial institution. And once that's sorted out and we've got our license to operate as a commercial bank going forward, our customers can then come back to us.
So maybe then, Owen, take us through what actually goes into liquidation of such banks, and maybe also take us through some of the potential risks involved. I mean, what if some of course, the depositors of the bank do not want to be moved to this new banking administrator?
Yeah, it's a fairly detailed process, but there are two ways of how a company or an institution like Ithala can be liquidated. The one is a voluntary liquidation, where the shareholders or the directors of the business then voluntarily say, well, we want to wind up operations. We don't want to continue as a company anymore, and we voluntarily then go into liquidation, and they apply for liquidation, and then it can be guaranteed. In this case, it's what is called a compulsory liquidation, where a third party, like the Prudential Authority, or it could be even one of the shareholders, it could be an interested party, or a creditor that is owed money by the institution, that then applies for a liquidation. And the first step is a provisional liquidation, and once that is guaranteed, or it's granted, then there's a period of about 6 to 8 weeks before then they move on to the next step. So it is quite a detailed process, but the downside is that, especially dealing with a deposit-taking institution like Ithala, is that there's broader impact on the customers. Ithala serves small SMEs in the KZN province and individual depositors or customers who are mainly social grant recipients, and they earn their SASSA grants using Ithala facilities. So if this liquidation goes through, the provisional liquidation, then there's a final liquidation order, there will be an impact. We're talking also staff involved that are employed by Ithala, just over 400 jobs that will be lost. Yeah, so it's not an ideal situation to go through such a liquidation.
A very quick one, Owen. I mean, what lessons then should the state learn in the running of state-owned banks such as Ithala or even the VBS?
I'm glad you asked that question, because this has got it reminds me of the VBS story and some similarities. Got some similarities with VBS, because VBS operated as a mutual bank, but they then head into commercial banking activities, and they also ran foul of the Prudential authority, and because they didn't have a commercial banking license. So the same applies for Ithala. I think the lesson here is that things should be done properly. Ithala is not a new institution. It's not a new age institution. This institution has been around since 1958. So it's been operating for almost 7 decades, 67 years of operation, and to keep getting exemption to operate as a commercial bank without getting a proper commercial banking license is not appropriate. It doesn't give comfort to the depositors. But I can understand why some operators choose to go that way, because it's easier. The requirements to operate as a mutual bank is only capital requirements of 10 million rand, but if you want to operate as a commercial bank to get your license, minimum capital requirement is 250 million rand.